the heels of this morning's news. Let's bring in John Najarian, co-founder of Market Rebellion, also a CNBC contributor. John, I have to imagine whenever you see a ridiculous moves in the market, parabolic, up or down, the options market has to start taking notice. What kind of activity have you seen? Are people jumping in to buy the dip?
Definitely, Dom. In fact, yesterday in KWEB, which is, of course, an ETF that tracks a lot of those big internet stocks, some of which you just mentioned, Tencent, Alibaba, they traded 23,000 like that very, very quickly at the April 25 call strike. And that was when it was trading at near the lows of the day at about 23. We, of course, made up that by the end of the day. And in the pre-market today, you've already said, these are screaming higher. KWEB in particular, I think up better than 27% in the pre-market. We shot you a picture of that activity. They were buying these calls very aggressively throughout the day. They weren't the only ones, Dom. Alibaba also very aggressive, and Baidu also very big volume.
Is this the kind of volume, is this the kind of trading action that you would see that might suggest there's a sustained move higher? Or is this something where you feel as though it's a very short-term bet, and because of the moves that we're already seeing in just the last couple of days, that these bets could be closed out relatively quickly, just as quickly as they got put on?
Well, as you know, we love to look at the time frame. What were they buying? Were they buying options that expire this week? They could have. They weren't. They were buying them further out, Dom. So when they're buying them out in April, that's a full month out. Might not seem like a lot of time to some of your investors, but to some of us, that's forever, a month out into the future. So they're predicting that prices do continue to rise. What I'd like to see next, Dom, is I'd like to see them roll up to a higher strike. In other words, they were buying those 25s with the stock now moving through, I think, almost 28 this morning, going deeper and deeper in the money. You would like to see them extend that trade further out into the future and perhaps at a higher strike, that 28 or even the 30 strike. And that we'll have to see if that plays out that way today. You know,
it's John, we're showing you a chart right now, and viewers as well, and listeners on Sirius XM channel 112. It's $26.65 right now. So we've already kind of blown past that 25 strike level. You'd like to see the roll up into, like you said, like the 26, the 28s, if you will. Are there specific names that you feel are better positioned for this rebound? I mean, these are all brand names, the ones that are listed here in the U.S. But is it an Alibaba? Mm-hmm. Is it a JD? Is it a NetEase? I mean, is it a Baidu? Which ones tend to catch your attention more in terms of where the most potential upside could be?
Sure. I would say it would be Baba on an individual basis, just because, you know, they really are rather the Amazon of China. But I'd say Baba and Baidu, those two in particular. I do like that broader market, KWEB. And Dom, if I could just really quick, you were talking about crude oil when we came on and how much it came down, you know, nearly $40 from the high that we put in March 7th. I was looking at the volatility of crude oil, U.S. crude oil, which is OVX, and that basically peaked at exactly the same day, March 7th. So we've come down dramatically in the volatility for crude oil, and I think that's probably showing you as much as anything that maybe the sell-off that was a little overdone. I got out of all my equities. Now I only hold call spreads out there into the future in crude oil. But I really like the idea that we stabilize here and then go higher. I don't like it in terms of what I'm going to pay at the pump, Dom, but I do like it in terms of that feeding frenzy that carried us to 130, as you said, has eased substantially. And now we get back to basically supply and demand. You
know, it's interesting on that discussion point here. We don't like it as consumers here, but maybe one way to hedge that is to be long oil right now, right? And then you can kind of hedge out some of those fuel costs on your pump side of things. John Najarian, thank you very much. We'll see you later on today on, of course, the Halftime Report and elsewhere.
Thank you.